Juicy FX speaking. Now we're going to be talking about what? Demand and supply. Demand is the buying pressure in the market, supply is the selling pressure in the market. Simple. Keep it simple. When there's much demand in the market, they are talking about buyers. Then what will happen? There are much buyers. What will happen? Price will increase. And when there are much sellers in the market, which is supply, it means what? Price will do what? Reduce. It will go down. Now let's go straight into the strategy. The first thing you do is identify the trend. Is it in an uptrend, giving us series of what? Higher high and higher low? Or is it in a downtrend, giving us series of what? Lower low and lower high? That's the first thing you do. The second thing you do is what? Mark out your demand or supply zone. When the market is in an uptrend, yes, buyers are in control. That's why it's moving up. Then what do? You look for what? Your demand zones. Because those demand zones are the areas where market moved slowly before what? They push up. Those supply zones are those areas where market moves slowly before they push down. When I talk about demand zone, I talk about it moving slowly. I mean like this. Consolidating the base. Push up, demand zone. Supply zone, the base. Moving slowly, consolidating, the push down, supply zone. These are the zones. This, 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 this. Now, break of structure. The third one. Let me put them together. First, what? Identify the trend. An uptrend or downtrend. You see an uptrend, then what do? You look for what? The base. When market consolidate before what? A break of structure. Then what do you do next? Next, you mark out your what? Demand zone, because it's what? Going up. Just put DZ. See, there's a break of structure. Then what do? Wait for it to return. See, when after this break of structure, it doesn't matter if the market moves anyhow. It doesn't matter the structure it gives here. As long as it returns to this zone. That is all you need to be expecting. It might do like this, it might move like this, it might give us like this. It can be an impulsive move back down to the what? Demand zone. All you need to do is once it touches your what? Your box, your rectangle, just enter aggressively. Once it's a clean chart, the chart is very clean, enter aggressively here. Like this. Put it here. Put your what? Stop loss down. This is what? 1:4. If you are waiting for confirmation, what you need to do is what? Look for what? Your buying pressure. Once you see the buying pressure or you see internal change in character, like after it has gotten to your zone, then you see the market moving like this, giving us series of what? Higher high and higher low. Inside here, they do what? You can take a buy. Now for the supply zone. When the buyers are in control in an uptrend, you look for what? The demand zone. When the sellers are in control in a downtrend, giving us series of what? Lower low, lower high, lower low. You look for what? The supply zone. And when you see the market moving slowly, consolidating, okay, this is the supply zone. All you need to do is what? Wait for the break of structure to make it valid. Then you wait for the market to do what? Go back into the supply zone. Take your entry. Then wait for TP. This works 80% of the time in the market. Now, let's say you don't know confirmation. You want to understand how to do the confirmation. All you need to do is what? Wait for it to get into the zone first. Then you see what? A market structure shift like this. After it touch the zone, market structure shift. You do what? You take an entry here because you know the market is what? Likely to continue. It's telling you that the market now wants to change direction. It wants to continue in its initial direction, which is what? Selling. Series of what? Lower low, lower high. They wait for TP. Simple. All you need to do is to keep back testing it, practice it, back test it, practice it. With time, this alone is an hedge in the market. When it comes to risk management now, the last one, what you need to do is what? 1:2. Risk to reward, 1:2. Put your stop loss. That's all you need for risk management. Always put your stop loss to keep you longer. Risk management, nothing less than 1:2, 1:3, upward. Now, let me show you all this in the real chart with real candlesticks. Go to my market structure video. I explain market structure shift. If you don't really understand how I explain this confirmation over here. Now we're in the chart. What do? Identify the trend. What trend is this? This is an uptrend. So you do what? You look for your demand zone where buyers are. How do you find your demand zone? Where the markets slow down or what? Consolidate before what? The break of structure. As you guys can see, the market is actually now, what's it doing here? Consolidating. Now let's see if it's going to what? Break this structure here. If it's going to break this structure. Did it break the structure? Let's see. Now back to replay. Oh, now there's a break of structure. Yeah. Once you see a break of structure, what do? You look for what? You go back to this position before the market what? Started what? Buying. Before it started moving. Did the market consolidate here? Did it do what? Did they move slowly here? Yes, it did. Now what do? You mark out your zone. You can mark it out like this. You can see where I'm putting my stop loss. Yeah. Do this. This one now is clean. First, it is an uptrend. You know this is an uptrend. You do this, you mark out. Then what do? You wait for the pullback. You can see just because I'm doing pause and replay doesn't mean the market will wait for you. Okay, it won't wait for you. Now, play. You will put it where? Yeah, go higher. Let me go to the higher time frame. Voila! Did you see it? Can you see it? This is what I'm talking about. Here, it's not actually showing any confirmation for a buy. That's one thing about these strategies. Not every time it gives confirmation. It might go immediately to your what? TP. Look at this, 1:3. What did we do before? I'll still give you my example. Consolidate, break of structure. First, look for this break of structure. If you can, when you see a break of structure, then you go back down. Did the market slow down here? Did it consolidate? Yes, it did. Then what do? You wait for it price to do or return, because you know that the market is already what? Is already buying. This is an uptrend. It's going up, so the market is likely to continue going up. You do it. You leave it. These strategies 90, okay, let me not say 90, 80% accurate. Now let's continue. Let's see if it's going to give us another one. Okay, this is not it. Let's go back. Go back lower. Now let's see. This is actually one called the break. This is actually one. See the break of structure. And sometimes you will miss trade. Anytime you miss trade, market slowed down here, then we can see the buy. Can see market slow down here because this is the movement. Then what? Break of structure, back to the zone, then what? Buy. Let's see if we can see one more, at least one more. I know there are many more. That's just one thing about the strategy. Okay, it's consolidating there. Wait. Looking at this is also a break. This one here is also a break, or you can just use this one, break of structure. You can see this break of structure. Did the market slow down here or not? It did. So what do? You can place your entry around here, move your stop loss a bit lower, or you can put it here. It's just that sometimes it might hit your stop loss. That's why you need to move it lower. Okay, then let's increase it. Then you do what? No, I won't take this. I won't take this 1:1. I won't take this. I would rather wait for it to go lower. Yeah. Or give me 1:3. Let's see if it's going to come to it. It's going to go to return. Let's see if it's going to return. Oh, it didn't. You can see it didn't. You can see the price. What did it do? Okay, move to this zone, to this. That's one thing about this thing. You might miss entry sometimes, but do not change your what? Strategy. Just keep going. As long as it's a working strategy, keep going. Demand, supply. Okay, let's see if we'll see another one. What do you do? Find your what? Demand zone if the market is buying. When you see it, make sure there's what? A break of structure. Looking at this, if you can see this is also a break of structure. Yeah. All this thing that is happening here doesn't really matter to you. Just mark out your zone. Let me go to the 15 minutes time frame. Go higher. Demand zone. Wait. Play. Wait, even the internal, you can see internal what? Yeah, you can see the confirmation. If you don't want to enter aggressively, you can see the break. Look at it here. The change in character. Why it was retracing. There's a change in character here. Then the break of structure, you can see it here. Change in character. What you need to do, you can take the trade like this. Okay, see, just take the trade like this. Go a bit lower. Play. Is it gonna hit TP or stop loss? Let's see. Can see it's going straight to TP. All you need to do is relax, be patient, leave it till it hits TP.
We are waiting.
Let me increase the speed. Okay, it's not looking like it will hit it, but let's see. It's going down. Okay. TP, exactly. You can see TP, the demand zone. This is how you keep doing it over and over again. Break of structure, find where the market is consolidating. Even all this internal break, look at it, all this internal movement here, all this internal move, you can see there's a break of structure here, back to this consolidating structure. You can see yes, consolidating, then what, straight to what, the zone TP. That's just how you keep doing it. Break of structure, yeah, did it TP or not? TP. Now for the supply zone, first you do is identify the trend. You can see the market is what is selling. Then look for, okay, now what are you seeing? The market is consolidating around here. Is there going to be a break? There is a break. You haven't increased it. Increase your stop loss. Okay, like this. This supply what zone? This is your trade. This is where you put your stop loss. Put your take profit. 1:2, because it's consolidating in here. Then now let's see. Oh, this market is also consolidating. Oh, consolidating, then a break of structure. Yes, I know the first one isn't over yet. I'm going to just mark it out and keep it. I'll hold it. So let us continue. Supply what zone? This is another one. So just take it like this. So it's 1:4. So straight towards TP. You can see supply zone, break of structure, retest TP. Supply zone, break of structure, retest TP. That is how you do it. As you've gotten the trend, you know the market is selling. There's an high probability to keep selling, right? All you need to do is find your supply zone, wait for a break of structure. Once you see a break of structure, if it has been confirmed that this is a what, a valid supply zone. The same for demand zone too. Then you wait for the retracement into that zone. Then what, straight. Then you wait for it to what, hit TP. Where do you put your TP? That lower low, or lower or higher high. If it's the demand zone, higher high. Supply zone, lower low. That price range it was before what, before the return. This range before the price did what, return back into that zone. Okay, that's how you keep doing it. And I hope this has been educational for you guys. Drizzy FX. Subscribe to this YouTube channel. Stay blessed. I'm going to be posting more educational videos like this, even far better than this, that will give you an edge in this what, financial market industry. Subscribe to this YouTube channel. Stay blessed, and I hope you guys keep what, making money.